I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It's Tuesday, December 7th. We've got four markets for you today: corn, soybeans, wheat, and going to wrap things up with live cattle. We've got March corn pulled up here, and this is the chart that we used in the last Tech Talk that we did, and essentially you can see that we remain range bound. Call it 560 on the low end, 590 on the top end, the middle of that range, call it 575, which is where we've been trading here the last couple of sessions, which doesn't really offer a whole lot of conviction to bulls or bears. Now, we did have a little bit of a rally here this afternoon off those lows, which starts to press us up against the top end of this resistance range. This 590 area is going to be a big one, though, to keep an eye on. If we fail here, we wouldn't be surprised to see some sellers step in, some long liquidation from the managed money perhaps, and take us back towards the low end of the range. So the closer we get to resistance, the more we like selling into it. Now, with that said, a break and close above this resistance pocket opens the door for technical momentum to the upside. So a breakout above this pocket would neutralize our bias in the near term. Do keep in mind that we have a USDA report out on Thursday. It's not a huge report, but it could be enough to jockey around some money flow here in the next couple of sessions. So that's what we're looking at for corn. Moving over to the soybean market, we've been a little bit more optimistic on here recently, and we've noted that a lot of people are bearish to this market, which actually makes us a little bit more friendly. We're kind of contrarian traders by nature, so anytime you get everybody on the same side of the boat, you might want to look at the other side, because oftentimes a lot of that bearish news in this case is likely priced into the market, and there's some upside risk. We've got a little bit of an inverse head and shoulders forming here. We've marked higher lows, which is great. We've got some higher highs here from the beginning of November to the middle of November. So we've got a higher high, a higher low. If we get out above $13, that would solidify a higher high and a new bull trend, which could invite some technical momentum into the market, as mentioned with corn. Now, the managed money position is relatively light in soybeans, so if we do get a good, strong fundamental catalyst to get the funds excited about being long this market, they do have powder to add. One of the catalysts, obviously, we talked about the USDA report on Thursday, but I think the bigger potential catalyst is weather down in South America. There's nothing that seems too alarming at the moment, but again, this is something that is very fluid. It can change quickly, which could pose risk to the upside. So that's what we're looking at for beans. Moving over to the wheat market, Chicago wheat. This is one that we're a little bit more bearish on, as with the corn market. We're forming a little bit of a head and shoulders formation. If we get out above this 820, 825 level, that would neutralize our bias. Significant support comes in near this 775 to 780 level. As you can see here, this was previous resistance, kind of where we got that next leg higher, acted as support and support. If that gives way, I really think it opens the door for a potential retest down at this 200-day moving average, closer to 720. So that's going to be something to keep a very close eye on there. And wrapping things up with the cattle market, we've got February live cattle, and we've been optimistic live cattle for quite some time, looking for the fundamentals to firm up over the last several months, and that's exactly what we've gotten. And you can see that we've gotten a stair step higher. Now, we are trading well off the highs that we've seen here recently, but we were able to defend this significant support, which we laid out in the last Tech Talk, down near 137. This was previous resistance and the breakout point from the end of November, as well as trendline support. So long as the bulls can defend trendline support, I think we continue to stair step higher. A breakout back above the 140 level, I think, takes us to new highs for the move, and those highs are up near 141.85. So we continue to be optimistic, but really want to see this defended. The break and close would neutralize our near-term bias, but overall, we still think this market could potentially work higher, and the same can be said with the feeder cattle market. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures involves substantial risk of loss and is not suitable for all investors.